Welcome back. We're watching European markets this morning in the aftermath of Italian Prime Minister Matteo Renzi's resignation. Take a look at what's happening this morning. Rallies across the board. This week, Italy voted no on a reform proposal that the premier had supported. The government is reportedly preparing for a taxpayer-funded bailout of Monte dei Paschi, that is Italy's third largest bank. Joining us right now is the CEO of ING Group, Ralph Hammer, is joining us right now. And Ralph, good to see you. Thank you so much for joining us. How would you characterize the Italian bank situation right now? The possible economic implications of this recent vote and the fact that these Italian banks have been loaded with debt even going into this disruption in Italy?
Yeah, well, the situation is very clear. They have a lot of non-performing loans on their balance sheets that hasn't been cleaned up. For that, they need capital. That capital needs to be raised one way or the other, either through, doing capital issues or through a bail-in or bailout. Now, the bailout is very restricted by the European rules at this moment, taxpayer bailouts. So the first scenario to consider is a partial bail-in of junior bondholders. But in the Italian situation, the issue there is that most of the junior bonds are held by private individuals. And that's the real sensitive part here.
So would it be the Italian government bailing out? It would be taxpayers at the end of the day bailing out the Italian banks, or do you think the ECB steps in?
I think it will be a combination of many different elements. So could be some bailout from the government, could be new fresh money coming in from outside investors. They have been working on this restructuring for quite a while, really. And they're also talking about a bail-in of junior debt, or senior debt, bondholders, really. But with under a deposit guarantee scheme, so up to 100,000 euros. So then, up to 100,000 euros, private individuals will be treated like they were holding a deposit rather than a bond. So
the bottom line is these banks are not going to go under. Regulators will not allow it, or...
No, banks generally are, not going under. They could be put in runoff, or they have to be safe one way or the other. So there's no immediate threat there. No.
What's your sense of Germany? The German market keeps rallying. Do you expect banks to be moving their locations, headquarters out of Britain after Britain voted to leave the EU, and after Italy now, and finding a home in Germany? Is that one of the optimistic features of this rally?
Yeah, well, I think the current rally is a combination of many things, honestly. The first one is that the expectation in the market is that Draghi will extend the program, the quantitative easing program, and will not start tapering, will not even mention tapering because that's too sensitive. That extension will also give time to bridge some of the elections that are coming up. So there is general positivism now around what Draghi may do tomorrow, basically, in order to bridge the next 9 months of uncertainty in European politics. Having said that, the direct link with a Brexit and financial institutions or companies moving from the UK to the continent, clearly Germany is an interesting place to base your bank. Frankfurt is one of the capitals, right, and one of the banking capitals, with the ECB being there. So the talent is already there. Not all of the talent, but quite some talent is there. So it's an attractive place. So is Amsterdam.
Now, you are opening a new office in New York City.
Well, moving offices in New York City.
Tell us about that.
So we've been in the U.S., actually. This goes back 200 years ago when one of our predecessors, Barings, was active in the U.S. But in the current shape and form we've been active in the last 30 years. We're growing our activities in the U.S. And we thought it was time to move offices. So we're moving offices, new offices here in New York City, and in order to also have room to grow.
Congratulations on that. Tell us your sense of the Trump economic plan and whether or not this is going to encourage actually more investment in the U.S.
Well, we don't know the total plan yet, right? And we don't know whatever has been said will become a plan. But
right. He says he wants to lower taxes and roll back regulations.
So a couple of things. So regulations will, basically a decrease of regulation. An easing of regulation is always good in order to support the economy. A decrease of taxes could be a one-time effect, really. I think some of the infrastructure plans that he's talking about are very interesting because they provide jobs on the short term, but also improve productivity on the long term. I think that's a more structural change there. that is interesting also for banks to play a role in. We've been active in the infrastructure finance here in the US for the last 15, 20 years. There's many stuff we're doing here. And either, you know, the government can move on privatization of some of the infrastructure, whether it's the ports or the harbors or the airports, railroads, further privatization, or toll roads. You know, all of those could also be financed by private sources.
And that's what they're hoping, these public-private financial agreements. Real quick, how would you characterize business at ING right now, the health of the consumer? What are you seeing?
Actually, it's improving. A lot of the consumer clients on our side are in Europe, really. There we see the housing market picking up, consumer confidence picking up, economic growth picking up. So the undercurrent is positive. So generally positive signals. We expect GDP to accelerate for Europe, not for some countries like Italy. We actually expect GDP to slow down a little bit, GDP growth to slow down a little bit, but overall positive. The global economy we expect to continue to grow, and you know, we're exposed to the global economy through our wholesale banking business, which is exactly what we do here in the US.
Right.
We've been growing 3%, 4%, 5% over the last couple of years, and we think that will continue.
Well, it's nice to see a breather in Europe, that's for sure. Despite what you're seeing with the referendum in Italy and a continued troubled banking system in Europe. Yeah,
well, specifically in Italy and some maybe also in Germany. I think that's part of the rally as well, right?
Ralph, good to see you. Thanks so much for joining us this morning.
Thank you.
Ralph Hammers is the CEO of ING Group. Coming up